Hello, I'm Lauren Frost, Director of Investments for Calgary Penn. Along with other members of the investment team, I'm responsible for managing the primary endowment portfolio. The purpose of this webcast is to update listeners on the endowment strategy and target asset allocation, as well as third quarter performance figures and priorities for the coming year. Our team will be providing these updates semi-annually. There have been no changes to the endowment's target asset mix since our presentation for the first quarter, and actual allocations are also consistent with 6 months ago. You'll recall from the last report that we've recently increased the portfolio's allocation to private infrastructure and private equity. We'll be taking measures to reach the 25% and 12% allocations to those respective asset classes, but that build-out will take place over several quarters. This next slide shows a list of investment committee members and the managers that make up the endowment. David Bissett and Joe Jugovic are newly appointed members of the investment committee. Recently, Calgary Foundation made a new commitment to its global private equity secondaries manager, Pomona Capital. The manager has performed well relative to its peers and as a strategy within private equity. The average since inception net IRR from the endowment's three prior investments in Pomona Capital is about 19% in Canadian dollar terms. This new commitment will help diversify the overall private equity portfolio, while also getting it closer to its target weight within the broader endowment. A reminder that building out an alternative investment platform takes time. Strategic investment pacing allows for better diversification across assets and time horizons. Also, it requires planning to achieve and maintain a target exposure to private assets. This slide provides a snapshot of performance, which on an absolute basis is an impressive 14.9% over the one-year period ending September 30th. However, it falls short of the policy benchmark and median Canadian Balance Fund. This relative underperformance is partially due to a change in the endowment's private equity benchmark, which has become the MSCI World Index Net plus 2%. Private equity returned 4.1% over the one-year period, compared to the benchmark return of 34.3%. However, our team still believes that this benchmark is appropriate, as we would expect private equity to outpace public equity over a longer time horizon despite short-term fluctuations. The endowment's private equity allocation is generating a 17.9% return over the 10-year period, compared to the benchmark at 10.1%. There has been a growing backlog of private equity deals due to a challenging exit environment coming out of the pandemic, but exit activity is starting to ramp up, along with an increase to valuation multiples. I should also note that the endowment typically exhibits lower volatility than a median balanced fund because of its alternative investment exposure, which is slower to respond to big public market rallies. This carries over to negative public markets too, where our private investment allocations expect to provide a cushion and enhance relative performance. For instance, during the public market lows, particularly in the first quarter of 2020, when equities were down double digits over the 1 year, the endowment was up 1.1%, outpacing the losses experienced by the median balance fund by 5.4% and the benchmark by 2.4%. Turning back to the total endowment, over the 10 years, the portfolio has surpassed the median balance fund by 80 basis points and the benchmark by 1.1%. The endowment has also achieved its 10-year real return objective. Next, I'll share some priorities for the coming year. Currently, the team is working through legal due diligence on a new private equity commitment we hope to share with you during the next webcast. We'll also be fine-tuning our private asset commitment forecasting model to solidify our short-term manager search priorities. The endowment is underweight infrastructure and private equity, so we'll be researching strategies available in these asset classes and making commitments over the next few years. We plan to also review the endowment's total exposure to emerging markets. The current exposure is a target 5%. However, adjustments made to the asset mix back in 2023 have resulted in additional exposure elsewhere in the portfolio. For example, through the endowment's exposure to global public equity. Our team will be considering what adjustments might need to be made to the emerging markets target to account for these changes and manage risk. Please feel free to reach out to the Calculation team if you have any follow-up questions about the contents of this webcast. Thank you very much.